it is a commodity. And Bitcoin in particular, it is digital gold, right? It is this store of value that's more divisible and more portable. So it has all the scarcity of gold, but it's better. And I meant to tweet this, but I just got lazy and I didn't go find the pictures. But, there's an interesting thing about Bitcoin that traditional commodities don't have. And there was and what I was inspired by is after JP Morgan, after Jamie was talking, someone tweeted the picture of, hey, Jamie, at least Bitcoin's verifiable, because there was a story that JP Morgan bought a bunch of nickel, right? The mineral, and it was in a warehouse, and literally they opened the bags. It was full of rocks. It wasn't nickel.
Mark Yusko, a prominent figure in the investment community, delved into the complex dynamics of Bitcoin ETFs, and the broader macroeconomic landscape. Known for his profound insights and outspoken commentary, Yusko provided a comprehensive analysis, starting with the Bitcoin market. He keenly observed the substantial daily inflows of Bitcoin into cold storage, highlighting the often overlooked supply dynamics at play. Despite market skepticism, he argued that Bitcoin ETFs have been remarkably successful, citing their impressive trading volumes and inflows. Yusko noted that these ETFs, including the recently launched ones, have secured top positions in trading volumes among US ETFs, demonstrating their growing acceptance and success. However, Yusko didn't shy away from addressing challenges, particularly the outflows from GBTC and the market's failure to fully comprehend the implications. He criticized the market's short-sighted perspective, especially in underestimating the impact of events like the Chinese New Year and the US tax season, which traditionally lead to significant Bitcoin sales.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
There's a whole bunch of holders that bought GBTC when the price was 10, 15, K. They're not selling. Irregardless of what the fee is, you can charge them 10%. They're not going to sell because you're not going to take a tax hit and pay a huge amount of those gains away just to save, 1% or 120 basis points. And clearly that's what Grayscale was banking on. Now, all the money in the tax exempt accounts, IRAs, retirement accounts, that's going. And, by most estimates that I've seen, that's about 15, 20%. I don't think anybody knows exactly of their assets. And I think what people just don't appreciate, I don't think they appreciate, is, Grayscale, yes, it was $25 billion of AUM, but they didn't raise $25 billion. I don't know the exact number, but my gut is it's around 10-ish billion. And that money came in the last bull run. And what people they've forgotten, that big first move from 10 to 60 before the famous Elon quote, most of that was GBTC, right? You had, $6-8 billion coming into a market that was still, reeling from the previous bear market before the last bear market. And, somebody was going after Eric on Twitter yesterday saying, your numbers are wrong. I've never seen a $3 billion inflow without, prices mooning. I said, well, Holmes, the numbers are right. So yeah, you're just missing a variable. And that variable that this person is not paying attention to is the sales. And the other thing that people aren't talking about, and I don't understand because it happens every single year, is Chinese New Year. Chinese New Year is coming and they got to fill the red envelopes with cash. So they sell Bitcoin. And this year, the sales are going to be worse than a normal year because you had big gains. And then we're going to have another one in, late March, early April, where people are going to have to sell to pay Uncle Sam. So these seasonal things, they happen. And the good news, like my socks, the penguins are going to be out there snatching it all up and stuffing it away at Coinbase. The amount of money that's going to be made, both in fees and transactions, is going to be really good for these companies. And I think people are just lost in the weeds for some reason. And I mean, it's our own fault, community-wise. I actually uttered the word God candle just like everybody else. And that was, clearly not smart because my 30 billion number was never a day one number, right? 30 billion is 0.1% of the 30 trillion. That was never a day one number. That was over time. And I will say, I did not believe, and I still kind of don't believe it, that three of the largest groups that I'm counting on all accepting this, finally, and saying, yes, we're going to put it in the models, Merrill Lynch, UBS, and Vanguard, basically got a call from Ms. Warren. You're like, well, you can't say that for sure. Like, I can say whatever I want. I'm boisterous, remember? So I can say that. And I believe that's what happened. I think Ms. Warren gave him a call and said, nope, you're not taking it.
Yusko also addressed the broader implications of regulatory decisions, such as the reevaluation of the Chevron doctrine, and their potential to reshape the power dynamics between regulatory agencies, the legal system, and Congress. He criticized the SEC's broad claims to regulate the crypto space, drawing parallels with the collectible market and commodities. He highlighted the growing disparity between the legal system's view of tokens and the SEC's stance. Shifting focus to the macroeconomic landscape, Yusko expressed concerns about the outdated methods used to assess the job market, particularly the birth-death ratio. While he acknowledged the tightness and lower levels of employment, he contrasted it with significant layoffs in big tech companies, suggesting a nuanced and segmented labor market. Let's delve deeper into his insights on these topics.
I do believe, and probably this is despite this will be not favorably perceived, but despite the illusion that there's some invasion at the border, I think our immigration policy has changed a lot in the last 8 years, and we just don't have people, because the boomers aren't going to do that job, right? They're just not. And there's this trough between the boomers and the millennials that there was a baby bust. And so there's just not enough people. And maybe part of it is, it's college town, the college kids, they're not actually going to do the work. They got credit cards and they're going to go, do the brunch. I don't think there's a lot of unemployment at that level, but there's a huge amount of unemployment, but I don't think they file claims. Like if you're laid off from Google, I just don't believe those people are going and standing in line to file a claim. I don't think. And I could be wrong. I could be totally wrong. It's 1 million people have been laid off by big tech in the past year. And that to me seems like a big number. And again, I would think those people, they got good severance packages. They have some stock. I don't think they are filing claims. Like if you're a factory worker or a construction worker or a day laborer, you're going to show up and you're going to file your claim. Now, again, maybe I'm missing the boat on that, but that's my only justification is there are certain parts about the economy that look so strong, like waiting 2 hours to get a brunch. But then there are other parts of the economy. You look at the Empire State number.
Yeah.
Oh,
huge miss.
Horrible.
Huge miss.
I mean, horrible. You look at Cam Harvey, right? Down at Duke, he's got this recession indicator. It's undefeated 8 for 8, and saying this time it's saying the same thing. You got the Druckenmiller indicator, which is a combination of things. Bank lending. Bank lending went negative only for the second time in 100 years. So there are things. Bank
lending go negative?
Growth rate.
Oh, okay.
Growth rate of loans, right? The growth rate of demand for loans. Yeah. So,
okay. Yeah. Got it.
It's like when people say, inflation has been eradicated. The White House says inflation. No, we got the growth rate back to a level that it was when you came into office, but that's still 3% of growth in inflation, and that's still understated. But it's growth rates versus actual nominal values.
The recent approval of nearly a dozen Bitcoin ETFs by the SEC sparked mixed reactions within the cryptocurrency community. While many celebrated it as a significant milestone for crypto, others expressed concerns about deviating from Bitcoin's decentralized ethos. Critics argued that relying on Wall Street intermediaries like BlackRock contradicted Bitcoin's fundamental principles and posed risks of manipulation and government intervention. However, proponents of Bitcoin ETFs view them as a positive step towards mainstream adoption and liquidity enhancement. They argue that ETFs provide a convenient avenue for both institutional and retail investors to gain exposure to Bitcoin without the technical complexities associated with self-custody. Additionally, the introduction of audited vehicles holding Bitcoin expands its accessibility beyond the realm of early adopters, potentially attracting a broader investor base. Despite the ideological divide, the emergence of Bitcoin ETFs marks a significant evolution in the cryptocurrency landscape. While some may lament the departure from Bitcoin's original ideology, others see it as a necessary adaptation to drive widespread adoption and integration into the traditional financial system. As Bitcoin continues to mature, its role as a store of value and a hedge against traditional financial instruments may become increasingly prominent. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.